now with tips and tricks to stay healthy without breaking the bank is investment advisor Michael Minter. Michael, welcome to Bloom.
Good to be back.
So, Michael, a lot of folks say that they want to stash money aside for preventative care. They want not only a healthier life, but a healthier bank account, and that's really difficult to do these days with inflation rates like they are. So what do you suggest?
We are entering some interesting times, to say the least. When we look at our prices of everything now going up as they are, I saw eggs, $7 the other day for a dozen, had shoes shipped to my son last year. Now they're 50% more in cost, almost cost the same amount as the shoes themselves, the shipping costs alone. So we can expect all of our pockets to obviously feel it.
But still, though, saving needs to be front of mind.
When I work with our clients, the first and foremost thing that I talk about before I can even work with them is, what is your budget? Now, as you've heard me say in the past, we're going to throw out the word budget because, as in the backstage, I asked who has a budget, and no one typically does, right? So I said, let's get out the napkin, and we can literally do that in 5 minutes. So let's start there. We've got to know how much we're spending on a month-to-month basis. If we don't know that, then we don't know really how we're going to get through the times ahead, because to save, we've got to know what we're spending month to month, and from that point, cash will be king as we go into the year ahead.
Okay, and now the big thing right now is to avoid financing high-priced items. We saw #1 retirement community, but the next thing is, do not put yourself where you're having to pay high fees, and because interest rates are really high right now.
This is a good one. Following into that is we want to look into those high-priced items this year, especially looking at paying for them in cash, not taking on high interest costs or payments. Good time to start to shop your credit cards. Call the companies. I've even heard there are companies out there that don't actually promote 0% financing, but actually do. So make sure you call and negotiate your credit cards. I always suggest taking, maybe you have a few credit cards, have one for the family, dial it down to 2, and then look to the cash back cards, the ones that are giving you free money. That is a good way to now add additional savings to your account. So shop those rates.
You mentioned shopping credit card rates. What about insurance rates?
This is a must. Good time of the year. Look at calling your health insurance broker, calling your homeowner's car insurance. You'd be surprised how much money we can save on a month-to-month basis. But as I follow up to that, I had a conversation the other day with a client of ours, and she said, I've been paying 25 years on my life insurance policy. What should I do? That came right to mind. I'm going to want to talk about that today, and that being, call your life insurance or a life insurance expert or someone who has all the insurance companies available to you. 1, to maybe reduce your costs on your premiums. 2, maybe a good time to take advantage of the policy that you've built up cash to become your own bank.
Interesting.
So this is a good point for especially financial advisors that specialize or have teams like we do that will look at all the insurance companies, reduce our costs, just like our homeowners, our health. Is a great time to do that this time of the year.
What about the 10% rule?
10%. I go back to a good client of mine who escaped World War II, as a matter of fact. And to this day, from the Great Depression, he still saves 10% on his income, and he's 80+ years old. That is something that can go a long way as we go into this recession, is that just setting it and forgetting 10% of all your income, putting it into savings. This is a great time to start to look to add those values to your own personal self and family, that every day or every month you're saving a minimum of 10% for yourself. And then start to turn into your IRAs, your retirement accounts, and those once you've built up emergency savings and times.
Now, when we're out and about shopping, and you mentioned earlier, the prices are skyrocketing. You say look to generic brands.
If you can look online now, it makes it even easier. On our phone, we can go on and shop those different rates. Generic can work out well. And as well as online shopping. This is another one we don't talk enough about. I know I'm very quick to say I need this, and I go online, I purchase it. Maybe a good idea, I thought, was to then save your online shopping to maybe 1 day a week, where you allocate that Saturday of the day with your spouse and you get together, you look at saying, I'm going to buy, and is it in my savings? Is it in my budget? When I went back to my budget, can I afford those things, or is it going to break the bank at the end of the month?
Next thing, diversifying your portfolio. Man, Wall Street's been a nightmare lately. A lot of swings.
For younger clients, this is the best time if we're able, because we want to take full advantage of the downturn. So we want to have a consistent month-to-month contribution. Over the long term, dollar cost averaging is going to work to your advantage. And then to our retirees, those who are starting to get nervous, are going to retire on income or are on fixed income at this time, really speaking to an independent fiduciary advisor to look at the financial tools that'll make sure that your income is in line with your needs, monthly needs, and you're not going to outlive your income in the future.
One thing I've always subscribed to that I know you suggest, because I have such a big family, is we cook home all the time, and you'd be surprised how much money you can save.
Couldn't agree more. I mean, I think of just the pizza, the $25 pizza I just bought the other night versus the $3 or $4 pizza we made last weekend for one of the games. Alcohol, when you go out to alcohol, that's another one. That's a pocket killer as well. So when you go out to restaurants, think about maybe now cutting that 2 days a week to 1 day, or maybe it's once a month. So going out to eat, but then again, look to your budget. You know, one of the things we have to look at, the sky is not falling. Life is going on. We will get through the toughest times, but this is the good times to take advantage of the opportunities that are out there for ourselves to learn and get better and be stronger longer term.
Yeah, and I think the biggest takeaway from everything that you say is really stop and rethink everything that you're going to purchase, because if you don't need it, don't buy it, especially not now.
Needs versus wants. Very important to know the difference.
All right. Well, as always, it's a pleasure to see you. Thanks for coming back to Bloom. I know I wasn't here the last time, but it's great to meet you this go around.
It's good to see you.